everybody. Welcome to our very first episode of Keeping It Real in Real Estate Investing. We are super excited. We've been planning this for a really long time and working out all kinds of glitches. So please be kind if things don't roll as smooth as we want them to. But my name is Jennifer Brouillette. This is my husband, Steff.
Hi, nice to meet you.
And with us are some of our favorite investing friends,
Mike Nicholson and Leeanne Nicholson.
And Mike and Leeanne are from Sault Ste. Marie in Ontario, and we're from Sudbury. And we connected last spring in a social media investor forum group. So we were all part of a really large group of investors who were kind of looking to share ideas and learn and grow. And that's how we first met up. Right, guys?
Yeah. And then I think from that point, where we really got to know each other was we started from that group. 8 or 10 of us got together and we created like an elite mastermind where we really grew and got to know each other. And I think it just seemed like our goals and a lot of plans that we had really aligned. And it seemed like our personalities really meshed and we were kind of on that same focus. So we were able to really, network and talk about a lot of similar things and a lot of similar goals.
Yeah. So Jen and Steff, why don't you tell our audience a little bit more about you guys?
So we started our real estate investment journey around 2011 when we had just finished having our third child. And we decided that looking into the future, we wanted to ensure that come retirement time that we'd be able to have more than just my pension or Jennifer's pension to rely on for income. And we decided to explore real estate investing. Jen had a coworker that had did his real estate course and became a real estate agent. And he was also dabbling in real estate investing. And we decided we were going to sit down and have a conversation. And from that point forward, we decided to start buying properties.
Yeah. So that is that all happened back in 2011. And we grew kind of quickly right at the very beginning. So the realtor that I worked with at the time, he introduced us to a mortgage broker who was really well-versed in refinancing and equity and leveraging. And it was stuff that we didn't really know anything about. And we've talked about it many times with you guys before, right? We all kind of came from that generation where you were kind of taught to save your money and debt was bad and you didn't spend and you wanted it sitting in the bank or sitting in a pot, for you to kind of access when you retired, and the rest of it just was going to take care of itself. So the whole concept of refinancing and pulling equity out and leveraging to buy more was really kind of foreign to us and really kind of like a totally different way of thinking. So we had a lot of equity in our house because we had been savers, because that was kind of how we had been taught to work our money. And so we had all of this equity in our house that we were able to pull out in a refinance. And we purchased 2 properties kind of back to back, hoping that would create kind of a situation where we could have enough cash flow that it might replace at least part of my income, so I wouldn't have to stay in the position that I was in back then. So Steff and I are both, I was a frontline worker, Steff still is. And it was really a stressful time trying to figure out with the kids and try to manage babies and shift work and babysitters and daycare and all of that kind of stuff. So we picked up these 2 properties in Sudbury, a 5-plex and a 4-plex in 2011, and just kind of rolled with it. And at the time, it wasn't enough to create the kind of cash flow that we needed for me to leave my position. But we felt that even if it didn't show as what we wanted it to be right at the time, we knew that it was a pretty decent foundation to kind of grow from and jump off of to do different things down the road. So that's kind of how we got started. And it was a really great experience. We found out very early in the game that we weren't interested in being landlords. So we only wanted to be investors. And in 2011, property management wasn't very mainstream yet, like it is now. But the realtor that I worked with, who was also a friend of mine, kind of introduced us to that whole concept. And it was like a light bulb went off for us going, oh, wow. So we don't have to deal with, tenant issues, and we don't have to deal with what happens if they don't pay. And we don't have to deal with if their shower breaks at 2 a.m. So that for us was a really big game changer and created the flexibility that it was, you know what I mean? I still worked at my job for a few more years. We had these buildings that were really being taken care of by somebody else, a little bit of cash flow coming in. We were kind of building that equity. So we kind of clicked along for a few years. And then, as fate would have it, my job shifted at work anyways, and created a situation that it didn't really work for us anymore. So I ended up leaving my job in 2017. Yeah. And then we really kind of decided we were going to up our real estate investing game, and there had to be a better way of doing things. And we kind of wanted to connect with people who were in similar situations as us that had kind of a little bit of a portfolio, but wanted to grow and didn't really know how. So actually that's how we connected with you guys, right? Was kind of through that group. And, and it kind of went from there. And then all of a sudden, right, all kinds of crazy stuff started happening, and all of this new learning and all of this new networking and different people to kind of have the conversations with that were like us. And it was very much a share, right? Where it was like, well, this is what we're doing. What are you trying? And, oh, we tried this and it really didn't work. And that was, I know we've had the conversation multiple times, was, to have those conversations about what works and what doesn't work is kind of what keeps it real. And that's really important, right? It's not about it being amazing 25 or being amazing 100% of the time. It's not about it being horrible, but there's a balance, right? Like there's a lot of days where it's like, oh my God, I'm going to lose my mind if we can't figure out how to do this. And those happen a lot. And that's the part that we really love about having these conversations with you guys, because you kind of get where we are and where we want to be. So it helps, it's supportive, right? And it's kind of encouraging.
And one of the things I found really helpful in having discussions with like-minded people is a lot of our friends don't understand what we're doing as far as real estate investing. And they really have a hard time separating being a landlord and being a real estate investor. I've explained it to a lot of people a number of times. If you want to be a real estate investor, that's great. If you also want to be a landlord, that can work, but you have to separate the two. For me, my time or our time, I think is better spent trying to look at what the next acquisition or next asset that we're going to acquire. That's time that's better spent. So I think it's really important to have conversations with like-minded people that understand what you're trying to accomplish.
Yeah. So that's kind of us in a nutshell. You know what? We've had great successes. We've had great challenges, you know what? And we bounce most of it off you guys, right? That's our Wednesday morning call that Leanne and I have every week. That's usually our Sunday evening call we try to have as a group, just to kind of touch base and see where we are and kind of keep everybody balanced and everybody focused on the good stuff. So I would love to hear what you guys have to say in terms of where you came from and what got you to where we all are now.
So I guess a little bit different of a story of you guys, but I mean, everybody has their own story, right? Yep. Mike, way back when we got together, 20 some years ago,
even though we're all only 30, right?
Right. Bugged me. Let's get into rent apartments. So we bought our first home together. Let's buy a duplex and live in part of it. I'm like, and at the time there was really nothing on the market. So I'm like, no, I mean, done. Right. And then we ended up getting into our second home. And at that time he's like, okay, rental property. We definitely need a duplex this time so we can live in part of it. And now we're started a family. We don't have time. I don't want to be, a landlord and having to deal with another unit and, this and that. And then we bought our second.
Yeah.
And we and we did exactly what you said. We paid down that mortgage because that was what we were taught to do. Mm-hmm. And through that whole time frame, Mike always bugged me. And I always had an excuse. We don't have time. We have a social life. We have this, we have that. But then in 2014,
Yeah, 2014 was really pivotal for me. I had, what I thought was the greatest job ever, a great wage, pension, company car, all that stuff. You go to a meeting, 142 of us, 72 of us left with no job. Basically,
Wow.
here's a little envelope. Thank you very much. We no longer need you. I was lucky. I got to keep my company car for 2 weeks, right? But I had to get in from that meeting, get into the car and drive home and call Leanne and say, hey, I no longer have a job, right? We have 2 young kids. We have a house. We have a mortgage. And at that point, I did a lot of mind work then. And I said, I'm not going to let this bring me down. I'm really going to come out of this stronger. And I always said at that point, I'm never going to let like a big company run my life and let me make those decisions for me. Like I'm never going to have to make one of those phone calls where I say, hey, I don't have a job. I don't know what we're going to do tomorrow. Right. So we really reshifted our mind focus and started talking about multiple streams of income and how important that is, that we're not going to rely on one. So at that point, I struggled. I think I worked 3 part-time jobs for a while and trying to figure out what to do. Was able to get back on our feet and was able to get full-time work very soon after. And then it was still, okay, what are we going to do? What are we going to do? But because, again, like you guys, we were taught to pay down that mortgage, we had a ton of equity in the house. And those conversations were kind of always going on about, let's do something. And then I'll let you talk about how she got into a situation.
But yeah, there's always that fear of, taking that money out of that house, right? And that's where that mindset, that old school mindset was embedded in me. And so I think that's what really feared us to do it. But then in 2017, I did a career move. I was climbing the management ladder, and where I was at, the person above me wasn't going anywhere. So I had to decide to go to another company. So in January of 2017, that's what I did. I thought this was the most amazing move that I could ever have. But shortly thereafter, I had a sickening feeling in my stomach that things weren't going right within the company. And the company grew very quickly, and the management didn't grow with it. And they sat on their laurels. So basically, competition came in, and they started losing business hard. So in my mind, I was the last one in. Who's going to be the first one out? That's going to be me.
Isn't it funny though, how your gut always knows, right?
Exactly.
Like you said, your gut told you, and you kind of could feel what was coming.
Yeah. So at that point I said, okay, Mike, let's do it. I said, there is a ton of income or equity in our home. Let's do it. But at that time we didn't know because we were out of the housing market for so long, like what could something buy you? What is, what is $100,000 buy you? What is 200? What is 300?
How does it work? How do we do it?
Yeah.
So we got a real estate agent, and I said, okay, let's look at, and then you're talking quite a few years ago before market like this. I said, what can we do with 100? What can we do with 200, 300, and 400? And we went through all these places, and that's where we found our fourplex. And the fourplex was our first purchase. And that was I didn't think we were purchasing anything, because the stuff we were looking at was, I wouldn't live there. So I'm not going to buy there. And then the fourplex came along, and I looked, and I was like, I could actually live here. So this is something that I could do. And then that's kind of was the bell for us. And signing those papers that night, I think we had heart attacks almost.
20 years I bugged her and was like, oh man, we got to do it. And I remember when we signed that paperwork, it's like, oh my God, what am I doing? Like,
I hope this works.
Yeah.
Right. Yeah. And it's like, oh God, I hope this works.
Yeah.
So, I think every time we sign, we still do that, going, oh God, I hope this works.
Yeah.
Right.
So that was, we put the offer in August. The fourplex closed in October. And 1 month later in November, I lost my job. So I was laid off. So yeah, so that
blows me away every time I hear it, right?
I know.
Oh my gosh.
And people around us were like, oh my God, what are you going to do now? You just bought a rental property. I said, oh my God, that's the best thing we did.
Absolutely. It's like high fives all around, right?
Yeah. And that's that power, right? Is that, especially with that fourplex, as long as, say 2.5 of them are rented, cash flows very well. And it puts you in a good position where, we never want to have to touch that money, but if we had to, it's available.
Yeah.
No, and I think that's kind of where we've all gotten to, right? Is we're in a position, and I mean, we're all a little bit further ahead than our first or second purchase, which is great. And we're growing and we're changing and we're learning as we go. But you've kind of created in those, even with the moments of, oh my God, I hope this goes right as you're signing, you're creating a situation that's going to help you fix things if things go wrong. Cause I mean, things go wrong all the time, right? Yeah. And whether it's just kind of a headache or a bump that you kind of get past, or if it's a major issue where it's a deal you walk away from, or like a major problem in one of your properties that you kind of have to fix. Otherwise you're the health of the building's affected, or you can't get insurance or whatever. It's still all prepares you to be able to deal with those things a little bit better. So I that's at least how we try to look at it. And it's so funny. So I just going back and I wrote it down because it made me laugh a little bit. When you said that when you were shopping for the fourplex, and if you wouldn't live there, you couldn't buy it. And it's so funny because when we were shopping at the beginning and we went into a couple of places where I was like, oh my God, like I can't. So my bar was, I could never bring my mom and park on the road and tell her, Mom, this is what we bought. So it's funny. Your bar was, you can't live there. My bar was, I can't show my mom. Like I cannot drive my mom by and point here and go, Mom, this is what we bought. So that was, we're really similar that way too. Right. Yeah. And there's a lot of different kinds of investors out there. There really are. And we've met so many in the last couple of years. And for us, like our priority is we want to create a space that's clean and that's safe for people to live in, where we can make a little bit of money and take care of their space and make it better at the same time. So I know everybody has different priorities and all of that kind of stuff, and different perspectives, but that for us is the most important piece, right? Is we're not really into buying stuff that's unsafe and dirty and all of those kinds of things. Yeah. And I think you guys are kind of on the same page too.
Yeah. No, we're definitely on the same page. And I think that's what really connects us too, right? We have the same goals and we have the same vision. So I think that's what really hit us off together.
Yeah, no. And I think it's the same set of ethics too, right? Is we're not looking to be greedy. We're not looking to be pushy. We're not looking to, it's not just about money and not for us. And it never has been. We try to run this like a business, and that's kind of where we've gotten to now. It's where it's like, okay, well, what are we doing to create, spaces that are safe and clean and make money so we can kind of keep growing as we go. And and you guys I think are on the same page as well.
Yeah. And whenever we buy a property, we always say, hey, could we live here? That's one of the questions. We always think that just opens up more possibilities, right? With our fourplex, who knows, in 5 or 10 years, we could sell our primary residence and move into that. What I mean? That could be an option. Hey, we could just turn around and sell that building, if we wanted to, or it could just continue to, be a source of revenue for us for 20, 30, 40 years, right? Yep. It's just by having a place that's available to you, that's a good quality place. It always has that option of, moving in there yourself, right? As an option.
Yeah. And it's funny you should mention that, Mike, because one of the challenges that we experienced in our real estate journey was, and what's really neat about real estate as well is, as long as you mitigate the risk, you usually come out on top. And I'll say usually, but we decided
most of the time. We have our stories too, right? Just like everybody else.
In 2018, we decided to buy a single family home. And this was just when Jennifer had left her job. And we decided we were going to do a flip. We thought this was a fantastic idea. Yep. We were watching entirely too many flipping shows on TV, Flipping Vegas and everything else.
Oh yeah, we were HGTV was always on, so we thought, hey, you know what? Like we can totally do this.
Yeah, we've got this.
100%
down pat.
Yep. So look at us go.
We decided to buy it turns out it's a 3-bedroom home now, but it was a complete gut. We kind of knew what we were getting into. Starting the project, but we took the house completely down to the studs. We removed the entire electrical, plumbing, everything. There was nothing left except for floors and studs.
That's a huge job.
It was a lot bigger undertaking than we thought.
And really, I have to interrupt just for a sec because Steff still works his regular 9 to 5 and he's a shift worker. So we were working on it on his days off, right? So all of a sudden we realized we were so far over budget because it was such a huge job and it was taking like so long. And it got to the point where we were like, I don't even want to go today because it's just taking too long.
Yeah.
Right. And all of those conversations with, oh my gosh, where do we kind of go from here now? Like, what have we gotten ourselves into?
And we had planned, we were hoping to do it in a 3-month turnaround, which was like we didn't give us enough time to do anything in 3 months. So I ended up doing all the demolition, and I ended up acting as the general contractor. So I was lining up all the trades and so on and so forth. So at the end of the day, we ended up 9 months down the line. We had the house completed. Everything was done. We spent way too much money. We were entirely way over budget. And
I wasn't working, of course, because that
Jen wasn't working.
Right.
Perfect. It's perfect, right? What else do you want at a time like that?
And
Exactly.
the price at which we had to sell the house to pull our money back out of the deal, the market wasn't doing what it is doing today. And there was no way we were able to sell that house in order to support
what we needed to pull back out to pay the bills.
Exactly.
Yeah.
Right.
So it was my father-in-law, Jen's dad, that came up with the idea. Why don't you just keep it and rent it? You already have rentals. So we thought, hey, maybe we'll check with our property manager and see if this is a possibility. And when we called her property manager, she was so excited. She told us right off the hop that it's easier to rent a single family home than it is an apartment. So
really, I think like 8 days later, she had a tenant sign the lease, and it was just a ridiculous amount of rent that I didn't even believe that people would pay. But I mean, that's kind of the rental market, and it worked out really well for the tenant. She was in a position where she wanted none of the responsibility of owning a house. She was happy to pay the rent and take care of our space as long as somebody could deal with cutting the grass and those kinds of issues and taking care when the tap broke or whatever. So it wound up being the little jewel in our portfolio that kind of turned into something that we never imagined it could be. So I think that like we talked about successes and challenges, that was a big challenge for us. So what do you guys have kind of in your background that was something that was a really big challenge, or that started off as something but wound up being something totally different? Is there anything like that?
Probably just our slow start and not getting, proper guidance at the beginning. And so, our example, when we bought our fourplex, we just, we made a lot of mistakes along the way, but we learned a lot, and we still did very well. But, when we bought that fourplex, we didn't understand, mortgages well. We didn't understand, refinances. We just knew we had some equity. So, we took out another, when we pulled equity out of our house, we took out another 5-year product. We bought that fourplex. 3 months later, we're like, wow, this is great. Like, let's do this again, right? Leanne was back working then, and we said, okay, it's been a few months. Let's see what we can do. Well, I called our mortgage company, and they're like, it's going to be, I forget it, it's going to be $15,000 or $18,000 to break that mortgage to get, full market out. I'm like, 15,000. I looked at Leanne, she's like, we're not paying that, so we always think, wow, what a big mistake. And then when we think about it nowadays, the rental income from that property, maybe in 1 year would have probably paid for that penalty, let alone, the 4 years in equity. Like, if we would have bought another fourplex the last 4 years, it probably would have went up another $100,000 or $150,000. So when we talk about, challenges that we've had, and not having that proper guidance and not having that proper mindset to say, somebody should have said to us at that point, if we had the right network, somebody could have said, hey, $15,000, hold on. First of all, you shouldn't have been in that product. That was our first mistake. And then the second one is, hey, do the math. That $15,000, but if you buy another property, well, the rental income that you generate from that, will that pay for that in 8 months? Will it pay for that in 12 months? Even if it was 18 months or 24 months, you're still further ahead to do that, right? And all that equity growth. So learning
and have another building.
and
right?
have another
Right, where the equity growth and the value is growing and the cash flow is happening, and all of, And that's exactly how it works. And that we had that happen to us as well, right? We got into a mortgage product that wasn't great for where we were at, and the penalty to break it was ridiculous. Right. But again, like we had connected with a different mortgage broker at that time. But, she said, listen, yes, it's $12,000 or $13,000 or $14,000 to break the mortgage, but you can pull out like $90,000 in equity. What can you do with that? All of a sudden, the 15 that you're paying as a penalty doesn't even matter, because you're coming out with 90, which can buy all kinds of different things. And that's what we really love about investing, is you can do so many different things with a chunk of cash like that. You know what I mean? And it's really, at the end of it, it's what fits your portfolio, what fits your priorities. Everybody's on little bit of a different timeline. Steff and I are more focused kind of on the long game than we are on short-term stuff. But you know what, you can kind of tool it around and figure things out and make it work for whatever you need it to work for. And, you know what, and we've had the conversations over and over again. There are so many markets out there. I think that's one of our favorite parts of investing, right? Is we now realize you're not locked into the community that you live in. Once you can kind of wrap your head around property management, all of a sudden remote investing can be done anywhere, right? Which is kind of brings us to kind of where are we all going, right? Which is what we wanted to kind of talk about to wrap it up. Where are you guys headed next? Do you know? Have you thought about it? Have we talked?
Well, we just like you, we moved into the States, and the success in the States was 4 properties in this past year in Detroit, Michigan, which is amazing.
Right?
Who doesn't want to make U.S. money?
Who doesn't want to make U.S. money? And now we're looking at the hot states. So we're looking at, we're investigating South Carolina, we're investigating Florida. We're looking at what makes sense for our next move right now. Yeah.
So Detroit was a good entry point because the price per door, the return on investment, that more was like to get established and set up a base. So we built a solid base of 4 single family homes there that provides us like a consistent income every month, a little bit of that safety money. And now we're looking, at some hotter areas, and because we have that monthly income coming in, now we can maybe take a bit more of a risk, right? We're looking at some hotter areas. We're looking at some beachfront condos. We're looking at some maybe like some townhouses in a community with a bunch of amenities where we can do like an Airbnb, and then those ups and downs of that Airbnb world make it hard if that's the only property that you have. But when you have kind of that base and that consistent money coming in, those 4 single family homes, it's a steady, income for us. And then that helps us ride out those waves of that those Airbnbs and those hot destination.
That's the benefit of diversifying your portfolio.
Yep,
exactly.
And you have that safety net of the cash flow that is just easy, steady money coming in. So it kind of lets you balance out somewhere else with a little bit more risk. And like you said, being able to kind of tolerate the highs and the lows, because you always have the baseline of the cash flow coming in from another part of your portfolio, which is kind of exactly where we are. Like we have a couple of different things in different markets, right? Some are higher cash flow, some are higher equity build. You know what? And it kind of balances us out and just makes it that much better for down the road, because it's almost like a protector, right? Like regardless of what the market does, the portfolio will sustain it because we're in different areas for different reasons, and the properties are doing different things, right? Some cash flow really well, some don't cash flow as well, but have a greater equity build that's going to happen a little bit faster. And that's what we really like about trying, different markets and different things. You know what I mean? Just to kind of see how it fits in with where we want to go and what we want to do. So I think that's awesome.
And I think we also balance each other out, because I have to rein Mike in a lot. He said, let's sell all in Ontario and we're all going to go to the US. I said, no, we need to diversify.
And you keep it balanced, right? Yeah. And it's so funny. So we had that conversation too about being investors and how you kind of complement each other, right? And you both can't be the same. Otherwise you'll lose your trajectory somewhere. So like at our house, I'm the gas pedals, Steff is the brake. Right. And I know that you guys balance each other very well at the same time. Right. And being complementary, I think that's probably why we're all such good friends, because we are all good at different things and we bring a lot of really great stuff to the table. and it's all different. You know what I mean? So everybody contributes, and it just makes it for a better experience. So I think
absolutely.
it's great.
Yep.
Yeah.
And then we're really excited about a couple of things else that we have going on. You know, obviously, me and Leanne we're both licensed mortgage agents. It fits very well with the real estate investing, and you know, Leanne does it full time now.
I walked away from the 9 to 5.
I know, which is so exciting. I mean, welcome, right? Isn't it amazing? It's a totally new mindset, honestly, because I know at the same time, right? I walked away from my 9 to 5. I got my real estate license. So I'm a little bit more focused on our investing stuff. And I work with investors that kind of want to have conversations about how to do what we're doing and how to understand and kind of connect them to the people that they need to talk to. But it's a totally different mindset than it's just going to work and getting paid and paying your bills. And I know for us, and we've talked about it too, right? To get Steff and Mike kind of out of that game. And then it's a full-time 100%. Let's just focus on this investing journey and really see where it can take us at that point. So that's kind of our end goal. I mean, we're not there yet. And that's always something to kind of aim for, but I think we'll get there. And I think
drink margaritas on the beach together.
100%. We talk about that all the time. So like I said, we're in Sudbury and it is so cold here today. Like I am dying for the day where we can do this and we're on a beach, like, or around a table with an umbrella and somebody's bringing drinkies and it's all great. So is there anything else you guys want to kind of talk about before we kind of wrap it up?
We got to talk about where we're headed.
Okay. All right. Well,
where are you guys headed?
Oh my gosh, we're all over the place. Honestly.
I know.
And I love it. I do.
Right now, we currently hold a 4-plex in Sudbury, a 5-plex in Sudbury, a single family home. We recently as last year, we bought a 4-plex and a 6-plex in Bathurst, New Brunswick.
Yeah.
And we also bought a vacant piece of property, a lot here in Sudbury, which is pretty neat.
We always forget to add that to people that ask where our portfolio sits, because it doesn't really do anything. It's not making any money. It's it's really small, but it's in a great part of town. And it was a ridiculously reasonable price point in. So we kind of stuck that one in our pocket, and we'll talk about that one maybe in a year or two.
That's your lakefront property.
Yeah. We're just kind of waiting to see what it's going to do and kind of grow from there. And like you guys, we got into Detroit last summer, and that's clicking along beautifully. And we can't wait to see that grow and kind of take off on its own. And we've got our first Florida property closing hopefully on Monday. That was the last one we got today.
Nice.
So
in 4 or 5 days.
Yeah. So hopefully Monday.
Exciting.
Everything's done on our end. So it's like a hurry up and wait. So we're just waiting to sign everything and for the money to move and we're in business. So we're super excited about that. And we've been having new conversations. I mean, in Florida, a couple of different markets in Florida we're looking at.
Possibly Texas.
Yeah, that's the new one.
Yeah, you know what? There's lots going on. It seems everybody I talk to, or different podcasts that I listen to, or videos that I watch. Costa Rica is very hot right now, so I'm kind of trying to see what's going on down there and see if we could make that fit. And I mean, even at the same time, if none of that stuff happens, I really love just kind of overseeing and watching everything do its thing in our little investing space and just kind of keeping an eye on what's happening and you know what, the conversations that we have every week and that, you know, we've all connected with so many awesome investors. And I just want to say too, that's kind of the purpose of this program, right? Is to kind of bring those people in that are doing what we're doing or trying to get started or winding down, you know, and to bring them on and to have those conversations and make the connections, because everybody has such a cool story and everybody's story is a little bit different. So we've got other investors kind of lined up that we want to bring in and have conversations with, and we have investor partners, and it's really cool what we kind of have planned and where we want to go with this and see if it takes hold and kind of grows its own legs.
We're excited about it because like you and I talk about every week, as all these different guests that we can bring on and talk, and all the information that we can, you know, help provide to people, which is, we always want to educate and help, right?
Yeah.
Absolutely.
So-
And you know what? We're
Yeah.
all investors and we're all investor partners at the same time, right? Like I have a real estate foundation. You guys are in the mortgage world. Like we've got access to lots of different tradespeople and all of these different team members that you need, lawyers and accountants and all of that stuff. That's really important and super overwhelming at the beginning, right? For people that are trying to get started and maybe don't know where to start. This, I think, is a great spot because you know what? We'll keep it real and we'll tell it the way it is.
Yeah.
And we'll let you know what went really well for us and what maybe didn't, and kind of how to maneuver around that.
And the good,
Yeah.
the bad, and the ugly of real estate investing.
Yep.
There you go. There you go.
Happy to
And I
share.
always think, you know, if we can, I think of where we've come in the last, 5 or 6 years. And I think if, the mistakes that we've made and where we, where we could be, if we could help mitigate 1, 2, or 3 of those little mistakes, that held us back a little bit. If we could help mitigate those for any other people, it was just amazing how, how fast that they could grow. And, even some of the people we're working with now and are helping out, just opening up their eyes to what's possible. It's pretty amazing.
Yep.
Yeah,
And you know what?
it's-
We're exactly on the same page.
Yeah, and it's rewarding to share your experiences and your knowledge with other people, and you're discussing something that you're passionate about and with like-minded people, which is very rewarding in my eyes.
Right on. So you know what? That seems like a pretty good place to stop for today. Do you guys have anything else you want to add? Anything we might have missed?
I'm just going to say one last thing is everything happens for a reason. So we're all here because everything happens for a reason. We became friends because it happens for a reason. So there
Isn't
we go.
it so funny how many things had to happen and line up to kind of bring us together as a group?
Yeah.
And I think
Yeah.
that is amazing. So
Yeah.
thanks for
Yes.
thanks for helping us with all of the craziness and the ideas and kind of making this happen. And you know what, everybody watching, we can't wait to bring you more and chat more and share more. So
Stay tuned.
Absolutely.
right
Very
on.
excited.
All right.
Have a great day, everybody.
Bye-bye for now.